I am Jeremiah Ajuda Dusu, the author of JAD's Business and Financial Accounting. I am Hi. Good to see you again today. Right. Hope you're having a great time. Yeah. Okay. Still on group balance sheet. Of course, if you've been following us, you would have seen that we've covered quite a number of areas. So we're still on it. Okay. I'm going to try to cover as much areas as possible. Okay. So don't forget that to make this happen, you can be part of it by supporting us in the form of paying to the account numbers to support the online classes. Okay, right? So we're still on. Okay, let's see. So today we're looking at indirect subsidiary. Okay. Now, what we are saying here is that the parent company has a subsidiary that also has a subsidiary. So what we're saying is this. Remember, A Limited is the what? Parent company. Now, A Limited has B Limited. Let's say A Limited has 80% shares in B Limited. Now, B Limited is what? Subsidiary to what? To A Limited. Now, let's say B Limited now has 70% shares in C Limited. Now, C Limited is what? Subsidiary to what? B Limited. So, by virtue of the fact that A Limited has controlling shares in B Limited, and B now has what? The controlling shares in C Limited, A Limited indirectly has a controlling shares in C Limited. So C Limited is what? An indirect subsidiary to what? A Limited. So it means that the subsidiary of what? B Limited is indirectly the subsidiary of what? A Limited. So we can as well say what? C Limited is subsidiary of A Limited subsidiary. So another word you can use for this is what? Subsidiary of what? Subsidiary. Or what they call subsidiary. Okay? So what we're saying here is that there is a main parent. There is a main parent. Then there is what? A sub parent. Okay? So this is what? Sub. Or what you call subsidiary. Now, in consolidating this type of scenario, There are two approaches. The first one is what we call the two-way method. Okay? Or what you can call the subgroup method. What it means is that you will first of all consolidate B limited with C limited. So you first of all do B plus what? C. That will give you the subgroup what? Subgroup balance sheet. Then you now use the subgroup balance sheet. You now consolidate A limited plus the subgroup. This is what we call the two-way method. First thing, you have to consolidate the what? Sub-parent with the subsidiary of subsidiary. So in this scenario, it's B limited plus C limited. Then after which you get the subgroup balance sheet, which is say B plus C. Then you now use the subgroup balance sheet to consolidate out of what? A limited. So now the A limited balance sheet with the subgroup balance sheet. That we call the two-way method or the subgroup method. Okay, so that's simple. So you identify, the sub-parent. In this scenario is B. Identify the subsidiary to the sub-parent. In this scenario it is C. You first consolidate that one. Then you now take that consolidated balance sheet. You now bring that one and consolidate what? With the main parent, which is A limited. That we call the two-way method or the subgroup method. Now, of course, it is possible to manipulate the consolidation schedule without preparing the subgroup balance sheet. What it simply means is that in the consolidation schedule, you're going to have, consolidated profit and loss for the main parent and the sub-parent. Of course, you know your schedule. Of course, your schedule, you're going to have cost of control. In this scenario now, let's say you have what? You have A limited in B limited, right? So we have A in B. This is 80%. You have another cost of control. It will now be B in C, right? So we have B in what? C. That's how many percent? 70%. So your consolidated profit and loss, of course, you have minority interest. Don't forget. Minority interest will be what? For A and B is 20%. For B and C is what? 30%, right? Now, you will now have what? Consolidated what? Profit and what? Loss. So in this case now, it will be for 2. Of course, in this scenario, A is what? A parent company. B is also a parent. So you have 2. You have for A and you have for what? B. So you go ahead and what? Spread the what? Share capital and reserves as usual. Okay? So when you go ahead and spread as usual, you have your what? Your what? Share capital. You spread for, let's do B and C. You spread, I got it. At the end of the day, you're going to have C, P, and L as consolidated P&L for both A and B. But that of B must be dissolved in the schedule according to the holding between what? A and B. So let's assume that after spreading your reserve, for instance, after spreading, okay, let's say this is what? C limited. So you're spreading between B and C, minority interest, and this. For share capital, reserve, you're going to have what now? Your pre-option reserve will come here, right? You have for what? Minority interest. Then you now have for what? For B, for C, P, and L. Okay? Now don't forget, for what? B as well, you're going to have share capital. You share between this as usual, and minority interest. Reserve, you have your pre. Of course, you're going to have minority interest. Then you have what? Consolidated schedule. Okay? Can you see what we're doing here? So remember now, at this level now, you want to what? Go ahead to get the what? The goodwill. But first of all, dissolve the what? The CP and L of what? Of B. So if we have to take this out, we're going to what? Minus it out of this place. You now share between what? The what holding between A and B. Remember that A has 80% in B, so A will take 80% of this. So we do 80% of this, you give to A, then whatever you have as well, you give to what? To the minority interest. So that would nil the what? It will nil the what do you call it now? It will nil the CP and L of what? Of B. Okay? Then what else? After doing this now, you do your goodwill. How do you prepare your goodwill? Remember, that will be adding everything up here and then adding everything up here. So you now bring your investments. What the investment of A in B? You bring it here. The investment of C, B in C, you bring it here. So of course, you can have goodwill or reserve. Let's assume you have goodwill. So you have the goodwill here, you have the goodwill here. So what do? You have to also dissolve this goodwill according to the holdings. So that means that what? If you take this out of this place, whatever you have here, 80% of it, okay? You see now, will come here. The remaining 20% will go to minority interest. You see what I'm done? So that will help us to also nil the word, the goodwill. So after doing this, you can now go ahead. At the end of the day, this will be nil. Then you can add up this to have an amount. This, you have the word goodwill on consolidation. Whatever you have here, you're going to have your what? Consolidated P&L for what? A. This is minority interest. At the end of the day, this is what goes to what? Consolidated balance sheet. This goes consolidated balance sheet, and this goes consolidated what? Balance sheet. So then you can go ahead and what? Consolidate the three balance sheet, which is what? A plus B plus what? C. After doing the manipulation in this what? Way. So this is, the two-way method in the consolidated what? Schedule, such that you do not have to prepare the subgroup what? Balance sheet. Okay? That's a two-way method. Now, the other one is what we call the second method, which is called the one-way method, or you can call it the conversion method. What we're saying is that you will first of all convert it to fellow subsidiary. So instead of, here what we have is what? A in B, then B in what? C. A in B here is 80%, B in C is what? 70%. So if we have A in B, then B in what? C. This is 80%, this is what? 70%. So we can convert it to what? A in B and what? C. Already we know A in B to be what? 80%. What is now A in C? Remember that B has 70% in C. So it means that whatever B has in C, A has 80% of it. If A has 80% in B, then it will have 80% of this share in C. So that means that A in what? C will be what? 80% of what? 70%. So what's 80% of 70%? So if we say 0.8 times 70, what do we have there? 56%. So this is what? 56%. So that means we say A in C is what? 56 what? Percent. So it has not been fellow. So with this, you can now consolidate as though you're consolidating your what? Fellow subsidiary. Okay? Then minority interest, of course, don't forget A in B, minority interest A in B, with reference to A in B is what? 20%. Then with reference to what? A in what? in C. Of course, that can simply be gotten directly, which is, can say 1 minus D, that's about, 44%. But if you want to calculate that in, a more broad way, you can say what? Minority interest. Of course, don't forget that A in C, minority, will be what? 20% of what? 70. So what's 20% of 70 there? That's 14. That's 14. Then directly, the direct minority interest based on B and C, that's 30%. Direct based on what? B in what? C, that's 30%. So that would be what? 44. That would be what? PC. So with this now, you can go ahead and prepare your what? Consolidated balance sheet as though you're preparing for what? Fellow. So it will be A in B. Instead of B in C, it will be what? A in what? C. But at the point of bringing in the investment, okay, of course, here now will be only one CPL, only what? A. But at the point of bringing in the investment, you have to share the investment of B in C in the ratio of what? The holdings that A has in B. So if B has an investment of, let's say, 100, so you're going to share it. The investment that would come for A in C, of course, no, you're using the what? Conversion. So this place will be what? A in C. It will be what? A in what? B. So instead of using the direct amount as investment, you're going to have to split it. So it will be 80% of the investment of B in C, for the A in C column, and then the remaining one will go to what? Minority what? Interest. Then you what? Do the necessary balancing and then prepare your what? Consolidated what? Balance sheet. So in summary, what I have said here is that in indirect subsidiary, we're saying that what? There is a main parent that has a subsidiary. Now that subsidiary that the main parent has also has another what? Subsidiary. So the subsidiary to the subsidiary of the main company is an indirect subsidiary to the main company. So I said A limited, for instance, has a controlling share in B. B now has a controlling share in C. So by virtue of that now, C is an indirect subsidiary to what? A. And I said for us to consolidate, there are two methods, the two-way or the what? The one-way, or what they call, two-way can be called, the subgroup method. Then one-way can be called the conversion method. So the two-way here, what I'm saying is that, first of all, you consolidate the sub-parent to the what? Sub-subsidiary, which is B and C in this instance. Then you get a subgroup balance, which you now consolidate what? A limited. And I said if you don't want to do that, if you don't want to produce the subgroup balance sheet, there's a way you can manipulate it in the schedule, to achieve the same thing in the two-way. Then there's another one called what? The one-way, or what I call the conversion. What I mean is that you're going to convert the indirect subsidiary to fellow subsidiary. How would I have done here? So with this, you can now prepare the consolidated balance sheet as though you're doing for fellow subsidiary. But the investment of B in C, you have to have the percentage holding of A in B of that investment, and then the remaining one goes to minority what? Interest. So all other principles remains what? The same. Okay? So take your time, go through this again. If you have questions, you can reach me on the numbers displayed. I'll be able to reply with the right answers. And don't forget you can support us. So let's really take a question that will make it clearer. Okay? Okay, let's really take this question so that we understand what we're talking about here. So here we have the following represents the balance sheet of Kings Limited, Queens Limited, and Pawns Limited as at November 2019. So we have the balance sheet all through the kings, queens, and pawns. Alright, they say, okay, information, they say Kings Limited acquired 1,800,000 shares in Queens Limited on 2016 when its reserve was 400,000 naira. Then we have Queens Limited acquired 800,000 shares in Pond Limited on 2017 when its reserve was 100,000 naira. Okay, they said in regard to what prepared the consolidation schedule and consolidation statement of financial position as at 2019. Okay, so what do we do here? So it's kings and queens in pawns. Okay, so we're going to have to show the two methods in the schedule so you understand what we're talking about here. Okay, first thing first, let's get the holdings. What's the percentage holding there? They said Kings has 1.8 million shares. So we have percentage holding. Kings has 1.8 million shares in Queens. So what's the Queens there? Share capital of Queens is 2 million. 1 naira each, 2 million. So what do we have? We have 1.8 on, so we have 1,800 over 200, 2,000. So what do you have? What's the percent? Well, that will be times 100 over 1. So what do we have there? 1,800 divided by 2,000 times 100. What do we have there? %. So we have 90%. So let's go. So this is the two-way method now. So this is two-way, right? So we have K in, or this is cost of control. This is consolidation what? Schedule. So we have K in what? Q. Okay? That's 90%. So the next one now is what? Q in P. They say Q acquired 800,000 shares in bonds. So what's the share capital of bonds there? I can see 1 million naira, 1 naira each. So that's bonds. We have 800 over 1 million times 100. I think this would be 80%. Let's check. The 0. Excuse me. We have 800 divided by 1,000. 80%. So we have this is what? Q in P. 80%. Then we're going to have minority interest. Based on this, it will be 10%. Based on this, it will be what? 20%. This is a two-way method. Now, we now have consolidated profit and what? Loss. We're going to have for kings and for what? Queen. Okay? So this is it. Okay? So let's go. Let's do this. So we have bonds. Share capital. What's the share capital for bonds there? Share capital for bonds there is 1 million. That's 1,000. So 80% of this is 800. And 20% of this is what? 200. So what's our reserve? The reserve is 300. Okay? Reserve is what? 300. So we have reserve 300. So we have pre and post. What they say for pre is what? 100,000. This will now be what? 200. So let's go. 80% of this. 80% of this is what? 80, right? That's 80. Because that will be the pre, right? Pre here will be 80. Then what will be the post or Q? That will be 80% of what? 200. That's 160. So the post for Q will be 160. Minority interest will be what? 300 times what? 20%. That'll be 60. So if you add up these three, it should give us our 300. Okay? That's it. Then, what do we have now? We have our what? Queen. What's the share capital of queens? According to the question, queens is 2 million. So 90% of 2 million is what? That should be 1,800. We have 1,800. So this will be what? 10% of this is 200. So reserve. What's the reserve here? According to the question, reserve is 1,100,000. So we have pre, we have post. So what's the pre? The pre, according to the question, say Kings Limited acquired it when reserve was 400,000. So we have pre here is 400. So 1.1 minus 400, that should be 700. Right? 1100 minus 400. So let's go. Pre-reserve will be 90% of this. What's 90% of 400? 360. So we have 360. So what will be the posts? 90% of 700. 630. So we have K here. The what? 630. So what minority interest? That will be what? 0.10 of 110. That's 110. So we have 110. So if you add these three up, it will give us 1,100. So let's try. We have 360 plus 110 plus 630. That's it. Okay? Now that we've done this, now we have to now liquidate this Q now. So let's take this out. So let's transfer to K. 160, let's transfer it to K. So here, we take it out here. Then what will come here will be what? The percentage holding of K in Q. Remember that this is for Q. Whatever Q has, 90% has, K has 90% in it. Whatever Q has, K has 90% in it. So this CP and L of Q, K has 90% of it. So 90% of this. So say 0.9 times 160. We have 144. So we have 144. Then the balance will come here, right? Which is 10% of 160, right? $16. So 16 plus this will give you this, right? Yeah. So this is off. We knew this, right? So let's come here now. So we have net assets acquired. This is 800 and what? 80. This is 0. This is 6. 8 plus 3 here. So that's 1. So we have 2160. Let's check. Let's check. 2160. Let's see how we do it. 1800 rather. Plus 360. 2160. Okay? So let's bring our investment. What is our investment? The investment of K, the investment of K, can you see that now? The investment of K in Q is 1,000. So we have 1,000, right? Now what the investment of KQ in P? What do you have? 1, 2. So as you can see, there is actually what? And there is what? 2 goodwills here. There's a reserve, and then there is what? What we call debit balance goodwill and credit balance goodwill. Okay? So let's go. This will be 0611. Okay? This is the goodwill. This is 12 minus 880. $320. You see? Now this one here is a credit balance goodwill that will go towards the reserve. Okay? So let's transfer. Take this, write out this anyway, out of this place. Bring it to what? Your reserve there. So this will nil out. Remember, debit balance goodwill is an asset. Credit balance goodwill is what? It's a reserve. That's why we're bringing it here. Now this guy here has what? The debit balance goodwill is an asset. So we have to share between these two. We share it based on the what? Percentage holding. So let's transfer. This is 320. 90% of 320. Let's do this. So what's 90% of 320? $288. Right? So we have 288. We come here. Then what's the 10%? Go back here. So that will be 0.1 times 320, 32. 32 will come here. So what we've done here is to what? Dissolve the goodwill of what? Of Q. So that what? We'll have it come to what? To King. Now Kings is having a reserve, so we transfer the reserve to what? The consolidated P&L. So don't forget, assuming King had what? A goodwill, it would have increased the goodwill. I mean, if it has a debit balance goodwill, it would have increased debit balance goodwill. But Kings here have what? A credit balance goodwill. That will form part of the reserve. That will brought it here. Then Queens have what? A debit balance goodwill. Of course, we have to dissolve since we are doing a two-way method. Then the dissolving now, we have the percentage holding of Kings and Queens, which is 90%. 90% of this is what we brought here. Okay? Then 10% we take to minority interest. So we're good to go. Okay? So this is dash. This will cancel, so this will be 288. This is goodwill. Okay? Then add up this. 200. Plus 60 plus 200 again plus 110 plus 16 minus 32, 554. So we have minority interests. 554. Then we have consolidated profit and loss. This will be 0. Okay? That'll be 630 plus 144 plus, what do we have there? 1160. And that will be, okay, don't forget that there's a need to also bring the reserve of Kings. Remember the Kings now, the main parent company. That we normally will bring the reserve of the main parent, the parent company to what? To the schedule. Okay? So let's create space here. Let's bring this here. Okay, so let's create more space. Let's bring, so we'll say King's reserve. What's King's reserve according to the question? 1050. So we'll bring here 1050. So we'll say this is CP&L. So we have 630 plus 144 plus 1160 plus 1050. 2984. We have 2984. This will be 0. So this is CP and L. So this is a two-way method. The two-way method, okay, recognizing the two parents, the sub-parent and the main parent, okay, and then seeing that what the unit of P is also shared, right? So let's do Let's take the second method, which is the one way, or what we call the conversion method, right? So we're going to have this. Remember, it's K in Q. Instead of Q in P, to do what? K in P. And we have minority interest. And then we have CP and L. Of course, this will be only K. K in Q is 90%. Q in P is 80%. But by virtue of the fact that K has 90% in Q, K will have 90% of that 80%. So let's go. So what's 90% of 80% now? 0.9 times 80, 72%. So we have, so one way, 72%, okay? That's when we say 90% of 80%, that's 0.9 times 80, right? Now, minority interest now. K in Q, that will be 10%. K in P, the 100 minus 72, okay, that will be 28, because we know how to do it the other way, right? So this is it. Right, so let's start with P. So we have funds. What's the share capital? Share capital is 1,000. So 72% of 1,000, that will be 720. Right? Now 28% of this, I think that will be 280. So if you add both, that will be 1,000. Right? So what's our reserve? Our reserve for pawn is 300. 300 plus 200. So for pre, we have what? 72% of this. What do you have there? That will be 72. For post, we have 72% of 200. What do you have? $144. Right? That will be 144. Minority of 28% of what? Of 300. That's 84. So we have 84. So we add this plus this plus this should give us what? 300. Let's try it. 72 plus 84 plus 144. 300. Okay? The next one now we have queens. What's share capital? Is there we have 2,000. So 90% of 2,000 is 1,800. 10% is what? 200. So what's our reserve? Reserve is 1,100, right? We have pre 400, post 700. 90% of 400 is what? 360. Then 90% of 700 is what? 630. Okay, then what's your minority interest? That'll be 10% of this. I think that's 100. Right? One zero. So we have the 110. If you add this plus this plus this, it should give you 110. Let's try. 110 plus 360 plus 630. Yeah. So let's go now. What do we do now? We have this here. This is 2. This is 9792. Right? This is 061. This is 2160. So this will be our net asset acquired. Okay? So let's go. What's the investment now? The investment of K in Q is, I think we can get that here, 1,000. The investment of Q in P is 1,2. We're going to share it between K and minority interest based on the investment of K in Q. Remember that whatever asset that Q has, K has 90% of it. So this investment of 1,200 now, K will take 90% of it here. So what's 90% of 1,200? $1080. So we have 1080. Then what's the balance? That'll be 10% of this. I think that's 120. So if we add this to this, to give us 1,200. Yeah, that's it. So what do we do now? So we say 7920 minus this will give us 1080 minus 792. 288. You see? This will be what? 1160. So this is the goodwill. Right? So this is a credit balance goodwill. Like I explained earlier, this is a debit balance goodwill. So this is an asset. This will go to the reserve. So let's transfer. So we're transferring this to this place. So we have 1160 to come here, 1160. So we'll transfer again. I'm transferring this to this place. So this will go out, right? Okay, so we have our goodwill now. Debit balance 288. This is the new. So this goes up. So we have minority interest. I'll be to add up everything here. 280 plus 84 plus 200 plus minus 120, right? Then there's 110. Let's go again. 280 plus 84 plus 200 plus 110 minus 120. 554. You have 554. You can see that the minority interest here is the same thing as what you have here. Good reason as what you have here. So there are two approaches, but there are two different approaches, but you're going to get the same thing. So what's the next one? We have King's what? Reserve. What's King's reserve? 1050. So if you add up, we have the consolidated P&L. So we have 144 plus 630 plus 1160 plus 1050. That's 2984. 2984. So you can see that these are two different approaches, but we're having the same end result. Okay? So with this, of course, this one is one way. Converted it to what? You can convert the indirect, structure to what? A fellow structure. But here we left it like that, doing the subgroup before the main group. Okay? So let's prepare. So we'll say what? Kings and its what? Subsidiaries. So we'll say consolidated statements of financial position as at 31st December 2019. So we have notes. So we have the assets here. So let's do non-current. That's note 1. Let's do that here. So we have note 1. So what do we have there? Land and building. Land and building. So we have land and building. For the three companies, we have 800, 850, 320. 800, 850, 320. So we add up, what do we have? 800 plus 850 plus 320. 1970. So furniture and fittings, that's the next one. What do we have? 700, 300, 450. 700, 300, 450. So you add up, what do you have? One 450. So you have 1970 plus 1450. 3420. So you have 3420. So the next one here, current, note 2. What do we have? Debtors, 500, 230, 160. 500, 230, 160. So what do we have? $890. The next one, bank. What do we have? We have 550, 520, 370. 550, 520, 370. $1,440. So what do you have there? 890 plus 1,440. 2,330. So we have 2,330. So there's a goodwill here. 288. So what do you have? 3420 plus 2330 plus 288. 6038. So let's go. We have the liabilities now. So what's the reserve? The reserve here can take it on the 2984. Share capital of the main holding company. What's the share capital of the main holding company there? 2.5 million. We have minority what? Interest. We have 554. We have 2984, right? Plus 2500 plus 554. 6038. This is your total liabilities. This is your total. You can see I have agreed. So what we've done here, okay, is to consolidate with what indirect subsidiary. So here, the holding company has a subsidiary. The subsidiary of the holding company has its own subsidiary. Okay? So that's what we've done here. So we've used two approaches. The two-way method, also called the subgroup method, and the one-way, also called the conversion method. So this is the two-way method. Of course, ordinarily you're supposed to prepare balance sheet of the subgroup as the subsidiary that has the subsidiary combined, then you now take it and then combine with what? The main holding company. But then we were able to what? Manipulate it in the consolidated schedule in the two-way so that we will achieve the same result. Okay? So we don't necessarily have to prepare the subgroup balance sheet. We'll adjust for it in the schedule and then prepare the what? The main holding company's what? Consolidated balance sheet. Okay, this is the approach using two-way. But you can also use one-way or the conversion, because here you're recognizing that King has control of both the subsidiary and the sub-subsidiary. But here you acknowledge that King has control of the subsidiary. Its subsidiary has control of its what? Subsidiary. So you are recognizing both the subsidiary and the sub-subsidiary, right? So this is the two approaches in the schedule. Then, of course, you have the same end results. Then prepare your what? Your balance sheet. Okay? So this is, if you have questions, you can reach me on the numbers displayed. I'll definitely reply with right answers. And don't forget, you can support us by printing account numbers displayed or sponsor copies of my textbook for free distribution. Thank you, and see you next class.